Have I been talking this whole time and nobody's been listening and the sound hasn't been working? Sorry. What I was saying is I was showing you the Kaishan report. It worked nicely depending on how you moved your stop. Sorry about that. I don't know what happened to the mic. It was working and then it just, I swear it turned itself off. Or I didn't turn it on, but I thought I had it on. I know I had it on. I tested it. Anyway, that was the Kaishan report. Depending on how you managed your stop, that was the key. So let's talk about ISM manufacturing. All right, ISM manufacturing, yeah, was the holy grail. ISM manufacturing has not been a great breakout. If you look at it, it's a 50-50 with gold, okay? It's a 50-50 with gold. And the gold trap trade for the past 4 months has been very good. So I'm trading the trap trade. I really just feel the breakout has been not great on this report. Like I said, it's 50-50. If you notice, what do you notice? 40 tick reversal, 13 seconds. 55 tick reversal, 2 minutes. 12-1 was a stop, and that worked as a trap. March and January both worked as a trap as well as a breakout. Okay. But March was very tough to have a good trade on this report. Let me make sure that my memory is correct. So let's look at March. So in March, we traded the trap, but you can see the way gold moved by watching the move. So just watch. The left side right at 10 o'clock. So to my way of thinking, gold was pretty darn choppy and not easy to do on a breakout, in my opinion. Our tiers were too big. Okay, so we did a bunch of testing this weekend. I do have adjusted tiers, and they've been safe for 4 months. Okay. I don't see a great breakout on gold, even on the winner. You know, that was theoretically a 1 target winner. You know, that's 8 ticks. It's 8 ticks. Okay. And the traps, I do like. I'll tell you what, let's set the trade up first and I'll show you some videos. So there's 2 ways you can trade it. Now, look, there's been quite a few reports that have been good on bonds. And look, bonds could work today because bonds ZN is trading quite nicely on a lot of reports. But historically, over the past 4 months, this is not one of them. One of the issues, just so you understand, I know there's people out there that like trading bonds. In order to have a safe bracket, it needs to be 8, or there would have been stop outs. And with a bracket of 6 to 8, there's just not a lot of profit left on most of the trades. It's just not moving enough on bonds. So I'm not recommending bonds on this report at this time. There was 1 stop out over the past 3, but profits were minimal on almost every one of them, the ones that did work. So I can't really recommend bonds. There's just not enough profit for the risk you would need to take. I have one modification on our gold trap. My stop is 22. Here's how I'm going to trade this trap trade. If this was 8 months ago, our trap trade would be too small. But the markets are not moving on this report as much as they were 8 months ago or 6 months ago. So the setup, in order to try and make money, it has to be smaller. So ISM, manufacturing, whoops, let me get the right setup here. Trap trade, template, load it. And ISM manufacturing, I just saved that. So I'm using tiers of 20 and 38. Let me make sure what I'm doing. 20 and 38 with a stop of 22. It's a 10 o'clock event, 5-second prep. 20 and 38, 10 o'clock event, stop of 22. It's generally a pretty quick trade. There was 1 out of 4 that took 3 minutes to get your profit or to get a bigger profit. In December, let me make sure the month. Yeah, in December, if you waited longer than normal, and it was 3 minutes, which is not that terrible, the profit was quite a bit bigger, but it's difficult on a trade that's as choppy as this one. It can be hard to wait that long. There was small profit available before that. So one more time, just for the initial setup. Position 1 is a 1. Position 2 is a 1. Stop is 22, and the tiers are 20 and 38 with a stop of 22, time of 10 o'clock. Activation prep is 5 seconds. And I am trading it. Now, if you want to trade the breakout, I would not have any problem using the DMM as it is set up. It's a bracket of 10, targets of 8 and 15. What I might do if I was going to trade a breakout, I would leave my first target at 8, so that if you get a move that gives you an opportunity to at least shrink your stop, and I would make my second target 25, so that if you get a really good move, you have the opportunity to move your stop into the price. So this is the kind of report you could get a good move. And if you get that move, it still wouldn't even have to stop us out of the trap. But if your target is a little bigger than 15, like 25, it can give the opportunity to move into the price. So that's how I would do it. I'm trading it live, Caesar. Yep. I'm trading it live. This particular event was years ago. It is years ago now. It used to be a prime trade. Prime trades were the predecessor to family money trades. And the ISM trades were prime trades before the pandemic. The pandemic changed a lot of reports, and it changed the markets too, of course. The pandemic was what do you call it? A watershed event. What else do you call it? a black swan event. Is that the right term? Let's check our time sync. I do want to thank everybody who's watching us on YouTube. If you hit that like button, that would be real nice. Hit that like button on YouTube. Let's check our time sync by going to the website Time Is. And when I do that, my computer is in sync. We want our computers in sync, especially if you're trading breakouts. When you trade breakouts, you want your computer in sync. Let's take a look at ISM in February. How did it work in February? All right, in February, so see what the problem was in February. It shot up and then did a very quick reversal, and the reversal was bigger than the move up. I believe our first target was hit, and then we were stopped out for a much smaller loss than it would have been if our target had not been hit. So watch that again. What happened was our first target was filled for 8 ticks, I believe. And then it turned around and stopped us out for the full stop. So we wound up losing 12 ticks. Now, there is something you can do just for a lesson. There is a lesson that you can take from that with the software. If you have a report that constantly reverses, but you still like trading the breakout, right? For instance, you still like trading the breakout. There are some features in the software that let you move the stop automatically. I'll show you the most popular, easy one. Come on. Sorry. Where's the bottom of my little screen here? Let me fix my news. Okay. So I'm watching bonds. Got my trap trade ready. Now, as I'm going to show you. So let's say you're trading a breakout and you want to move your stop automatically if your first target gets hit. So there's a nice feature in the software that lets you do that. So you have your breakout set, etc., right? But it has to be a breakout. So I have a trap trade set up on my right chart. Let me set up a breakout on my left chart. I have a trap. So if you're setting up a breakout trade, breakout in trade type, moves target 1, stop move. Under profit target 3, target 1, stop move. If you put in BE -3, that could move your stop to break even -3 automatically if target 1 gets hit. Or you could type BE to move it to break even. You could type break even +4. You could type 4, and that would be break even +4. But target 1 stop move will move the stop automatically if your target gets hit. If you're trading one contract, you can use, if the market moves X ticks, move my stop to break even plus X ticks. So let's say you're trading one contract and you have a 15 tick target, and the market only moves 12 ticks. It fails to hit your target and it reverses. Well, and then it stops you out because it reverses and hits your stop. You could say something like this: if the market moved 12 ticks in your favor, move my stop to break even plus 5, just put a 5 there. And then as it's reversing and taking you out of the trade against you, it would move your stop to break even plus 5, because remember, it moved 12 ticks in your favor. So it's possible to save a trade that might have been a loser with one contract that can move the stop. Because that's another way that you can move the stop. You just have to keep track, well, what's my target? You don't want to, if the market moves more than your target, that would make no sense, right? To make that number bigger than your target, because your target will take out your contract. But so that's an interesting feature that works. If you're trading, especially if you're trading one contract. And you're always assuming that the market's not moving so fast, of course. In ultra, ultra, ultra fast markets, sometimes the software can't get orders placed fast enough. That can happen for sure. But many trades, behave pretty normally, and you will get that opportunity to get a decent fill. And you can definitely, we use that feature, we've used it a lot on the bond auctions, because there was a time the bond auctions were not working well at all for a while. They're working much better now. And so we were trading just one contract when they weren't working as well. And that's a nice feature for the bond trades. So I'm just watching ZN. I'm not trading it. I really don't want to be distracted. Let me show you the setup I'm using one more time. I've got one position for size 1, one position for size 2, a 22 tick stop, a tier 1 of 20 ticks, a tier 2 of 38, and an activation of 5 seconds. 20 and 38, 10 o'clock event, activation of 5 seconds. And generally, the trap trades have worked pretty quickly on this event. If I don't get a reasonably quick fill within 20 or 30 seconds, I will probably cancel. I'm not going to wait around watching trap trades lumber their way into a fill. Okay. That I'm not going to do. But I will give 30 seconds or so. And then the breakout, if you're trading the breakout, it's a bracket of 10, activating at 9:59:59. Targets anywhere between 8 I think targets between 8 and 25 to 30 are acceptable because you've had two winners, 47 and 58 ticks, and a stop of 20. So let's see how it goes. And thanks again for everybody watching on YouTube. This is our stream of the week this week, streaming early this week. It's also a holiday week. There is Good Friday on Friday, and last year, the U.S. jobs report was scheduled for Good Friday, just like this year, and they released it on Good Friday. So that's a trade event that we'll probably miss. They'll probably do the same thing this year. It's scheduled for Friday, which is too bad. The jobs report's been good. It's been a good trade. So I was disappointed to see, again, we have Good Friday on the jobs report. So we have about 2.5 minutes to go. So once again, the idea of the trap trade is we expect price to go in one direction, and we will buy or sell the market in the opposite direction of the move. And then we expect a change in direction to give us profit. That's what we expect with a trap trade. If I were trading bonds, I would absolutely use, even though it's a big bracket, I'd use an 8 bracket, I think, to try and stay safe, knowing that it might be tough to get profit unless there's a big move. All right, so we have a minute to go, a little bit more than a minute. So usually when the numbers are below 50, that's considered negative on this type of a report. So the forecast is for negative manufacturing, which I think will be the case, but that's not what really matters. It's the offset that matters more. And also how the report is construed in its relationship with inflation, which is not always immediately obvious in a second. Our orders will show up now. Okay, so there's our orders. Now we're well above I'm well above the high of the day, but I don't like the behavior because the news is very good. The news is very good. If we can hang in, bonds were great. I just don't know if we're going to be able to survive the move up. It doesn't look like it. Maybe, I don't know. Not feeling optimistic. No, I think we're in trouble. I mean, we're well above the high with the stop. I can't really risk more than this. It's not going to work. No, it's a shame. Look, it worked as a breakout. It's so frustrating. It's so frustrating. The move was just too darn big. Too darn big. 4 months in a row, the settings were perfect. 4 months in a row, the settings were perfect. Absolutely perfect. 4 months in a row. Bonds, I didn't see the initial move. They looked like they had a pretty darn good move also. You know, very honestly, I was thinking I would put my stop above R2. That wouldn't have worked either. It would have just stopped us out just now. So I think there was just too much agreement in all the price that the breakout worked perfectly. It looked like extremely frustrating, extremely frustrating. No reversal happening here at all. No reversal at all. Really, really too bad. Too bad. Let's look at the video because, you know, obviously the breakout, I believe, let's watch the immediate movement. All right, here's the video. So look, the price reversed, but it was well above R2. 14 ticks above R2. I mean, I was thinking R2 because that's it's not even that important pivot. You know, it's not R3, it's R2. And then 14 ticks above it, or it's 20 ticks above it actually. 201.40 to 203.40. It would have made for about a 40 tick stop at least. It was just too big of a stop. But maybe not. You know, on earnings we use 60 tick stops on some of the trades. Let's look at the instant movement because today it was a perfect breakout. It looked like, let's see what happened exactly at the time of the trade. So gold was fast, but that was did anybody trade the gold breakout out there? Did anyone trade the gold breakout? Hit target one, John, and then stopped. It might have been it pulled back too much after hitting target one, and it depends where you would have gotten filled also. Did anyone trade full size gold on a breakout? Let's watch that move again. It was a 10 bracket. So the price was, so it would really depend on where you got filled. Now, I would have had, you can't tell by watching the trap trade where you would have gotten filled on the breakout. The bracket was 10, right? Bracket was 10. And also, it moved early. It moved the second the orders would have gone on the chart, which might have made for more slippage. Also, it might have been a difficult fill because it moved early. Now, bonds, on the other hand, watch bonds. I would have used an 8 bracket. Bonds didn't move quite as early as gold, but very close. It's close. Just watching bonds one more time. Again, it would depend on where you got filled. Would have a big issue about, you know, where your target would have been. But I like the move that bonds had because they didn't pull back nearly as much as gold did. So long, Ollie. So, and even still, gold not pulling back very much at all. Not at all. So just bad luck on the trap. And it's definitely related to all the news being negative. That can push gold to the upside. And it pushes bonds to the upside as well. And that is the enemy. What's the enemy of a trap trade? A move in one direction that just continues. You know, now we're almost 10 minutes after the trade and there's not a significant pullback yet. Ultimately, there's going to be a pullback, but not soon enough for our trade. So that's why it didn't work. Okay. Any questions, folks? Any questions? Chantal, are you still there? So I want to thank everyone for watching on YouTube. Thank you very much.